Good afternoon. You're watching Midcap Radar here on CNBC-TV18 this Friday afternoon. I'm Hormuz Patakia. With me is Vivek Iyer. The Midcap Index has slipped into the red now as we speak, while the Nifty has significantly cooled off from the day's high, but is still in that 23,850, 23,900 band, Vivek.
That's right, and it's been drifting in that range for quite some time now. Today, it's been a day, we are starting off the January series, but it's been a day we've actually seen quite a bit of selling pressure every time the Nifty tried to move higher, and that's been the trend in this particular week. What's doing well? Pharma stocks are doing well, and what's not doing so well is actually the entire metal pack. But we have quite a lot lined up on the show. Let's start off with the top headlines. Stocks clock gains ahead of the New Year week. Auto and pharma stocks lead the charge, followed by healthcare, while metal and PSU banks are the soft spots. Mid-caps underperform.
The rupee is in a free fall, set for its biggest single-day drop in nearly 2 years. Now it has fallen over 0.5% to a new low of 85.81 compared to Thursday's close of 85.27 against the dollar on sustained buying by importers. Dealers say that some of the RBI's positions in the non-deliverable forwards market are expiring today, and the RBI may be allowing them to be settled in the onshore market.
Star Cement gains in trade after Ultratech Cement picks up nearly 9% stake in the company for a little over 850 crore. As consolidation in the cement sector continues, the transaction is expected to be the first leg of a bigger stake buy.
Jubilant Foodworks is in focus after it signed a deal with the Coca-Cola India to purchase its portfolio of sparkling beverage products. Now, this allows Jubilant's franchisee restaurants chains to serve Coca-Cola and other products.
Religare Enterprise is under pressure after Madhya Pradesh High Court stays the company's AGM and RBI's approval for an open offer. Stock corrects over 6%.
Well, 100 points off the day's high is the Nifty, and it has continued to meander in that range, and that has been the story of the week, right, for the markets. Every time it goes up to 23,850, 23,900, there has absolutely been zero strength to take that index towards that 24,000 level. Now, of course, volumes are low, participation is low because we are heading into the new year. FIIs are absent. They'll only return after the first week of January. You need to keep that in mind as well. And it's absolutely flat. If you even look at the 1-month chart for the Nifty, it's gone absolutely nowhere, and it's remained in that very, very narrow range of 23,500 to maybe 24,200, 300 on the upside. It has struggled to cross that 24,200 mark. But the broader markets, though, there are plenty of movers there. The mid-cap index may be trading at the flat line, but it has slipped into the red as well. And now it's seeing some bit of recovery from the lower levels, but that too is not seeing any significant action today, as is the small cap index. But which are some of the big movers in the broader market? There's plenty of stock-specific action, of course. Vamakshi is here to take us through those names. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Yes, a lot of stock-specific action today. Let me first bring up the list of all the stocks that are gaining momentum in the trading session today. First up is Finolex Industries. The stock has surged by almost 10%, and in fact, the stock is up the most in the last 10 weeks. Finolex, apart from that, TVS Supply Chain earlier in the day was up almost 8%, and this is the biggest intraday gain that they saw since April 19th. Cochin Shipyard is another counter that is up nearly 5%, while Escorts Kubota, on the back of a positive note coming in from DAM, the stock is up nearly 4.5%. Footwear stocks are also doing well this afternoon. Metro Brands, Bata, Campus Activewear are up anywhere between 2 to 6%. Apart from that, we're also witnessing healthy gains in the pharma pack as well. Acom Drugs, Glenmark, Abbott India, Laurus Labs, all of these counters are up nearly 2 to 9.5%. Apart from that, there's also a lot of stocks that are buzzing on the back of strong volumes. PTC India makes the list 4% higher. Usha Martin is also seeing an uptick of almost 4.5%, and Go Digit also makes the list at 2.5%. On the flip side, this list is quite interesting. This is the list for top mid-cap losers. Keep in mind that all of these stocks featured on the list of top gainers yesterday, and all of these stocks have corrected today anywhere between 3 to 4%. And this list includes Intellect Design, Amber Enterprises, KFin, as well as Blue Dart.
Thank you so much for that, Vamakshi. Vamakshi, you alluded to quite a few pharma stocks that are doing quite well. And even as you speak, quite a few of the pharma names. Have a look at names like Lupin, have a look at names like Ipca Labs, Biocon, Sun Pharma. All of these stocks now at the day's highest point. The pharma index has started off the Jan series on a very strong note, over a 1.5% in trade is what the pharma index is gaining. But moving on, it's now time for the growth code, an initiative by Grow and CNBC-TV18. designed to provide you with the insights and strategies to navigate the market and make informed trading decisions. Today, we will mystify how traders can prepare for black swan events.
The market is a game of delicate balance. Traders have to build positions, manage risks, and always strive for a steady upward trajectory. But sometimes a sudden unexpected disruption can overturn the whole game. Such events are called black swans.
So there's a book by Nassim Taleb in which he says that by the outset you cannot predict that a black swan is going to come. In fact, they say that there are 12 recession outcomes every year, but hardly any materialize.
It takes only one shock to show how devastating a black swan event can be. In 2008, we got a stark example of this. The subprime crisis came seemingly out of nowhere. From mid-January 2008 to mid-September 2008, Nifty lost 35% of value. Lehman Brothers filed for bankruptcy on September 15, 2008, and Nifty lost another 25% in the next 3 months to 3,000 level by the year end. Investors lost fortunes, and retail investors faced the hard brunt as the Indian markets lost 50% of market capitalization in a single year. The 2020 COVID-19 pandemic presented another black swan event. On 28th February, Sensex crashed 1,194 points in early trade. But this time, Indian traders were better prepared.
So traders were able to manage the 2020 COVID crash. Traders were aware that you need to manage your overnight risk, but I made a rule that no matter if I'm carrying any overnight trade, I'll hedge the trade. So if I had naked futures, I would have lost 3.5 lakhs on a single lot. But due to my hedge, my loss on this trade was only 20,000.
The lesson? Black swan events can't be predicted, but with planning, you can cap your losses.
So one key lesson which I have learned is no matter how sure you are about the markets, every trade should be hedged overnight. And in case of any major correction, you should not lose more than 5%. And the way to do that is, suppose you are long in any instrument, you buy a protective put, which means you're buying a put certain percentage away from the current market price, so that even in case of any correction, your losses are capped and you're not losing more than 5% of your trading capital.
So the market may throw curveballs, but with the right risk management, you can endure these unforeseeable events.
We are continuing our special coverage as we pay homage to former Prime Minister Manmohan Singh. At the moment, we are joined by someone who perhaps knows him best. We are joined by former Reserve Bank of India Governor, Dr. C. Rangarajan. Dr. Rangarajan, thank you very much for joining us. You know, in a way, both of you are parents equally of India's liberalization of 1991. Can you narrate your interactions with Dr. Singh during those crucial moments of 1991-92, when you as Reserve Bank Deputy Governor and then Governor, and he as Finance Minister, had to take very big and crucial decisions?
Well, the various measures that we introduced at that time can be broken up into two parts. One is ensuring stability, and the other is introducing structural reforms which will prevent the occurrence of crises of the type that we had in 1991. Obviously, stability is important because we need to have a stable economy before we can introduce the reforms, and therefore the twofold approach to the reforms is critically important. And I think the first year and a half was taken up much more in the area of stability. And we had to take a number of decisions, like the devaluation of the rupee, which was done in 2 installments, and it went through a period of a little bit of a crisis in the implementation of the decision itself. But I think the finance minister then was the Manmohan Singh, and I was the deputy governor at the time. We negotiated it in such a way that we did go through the 2-stage implementation of the devaluation. I think there is a lot written about it, and that I ought to say that he stood by me because I was asked to implement the decision, and I did it. Of course, as far as the shipping of gold was concerned, which is also an important decision at that time, it was not the decision of Dr. Manmohan Singh, but it was the earlier decision.
Yes.
But he did not in any way come in the way of implementing that decision. And later on, when questions were asked in the parliament, he defended the act of sending out the gold.
Sir, that's always a sign of maturity, isn't it? When subsequent governments cleanly pick up the baton from the previous government. Let me come to other issues. Both you and Dr. Manmohan Singh freed the banking system from Reserve Bank set lending rates and deposit rates, right? At that time, deposit and lending rates were set by the Reserve Bank. You all freed it and allowed banks to do it. You also, both of you, issued new banking license to private sector. Can you take us through the banking reform decisions?
The decision to implement the basic philosophy. The new philosophy that we introduced was that reduce the licenses and permits and controls, reorient the role of the state, and wherever possible, introduce competition so that the efficiency of the system will increase. So this is the basic philosophy, and we were trying to implement that basic philosophy in all the areas, and one of the areas was finance. And I would say that there is another thing to which you may come, that is the exchange rate management. But the point really is, as far as the banks were concerned, yes, the banks are judged for, as far as their efficiency is concerned, about allocative efficiency and operational efficiency. The nationalization of the commercial banks looked at the allocative efficiency. The reforms that we introduced in the early 1990s looked at operational efficiency. We said that if banks have to fulfill the tasks that they have been charged to do, then the banks should be able to implement efficiently their activities and make profits. I mean, I think making profit is not a bad idea. I mean, I think, therefore, that is what we did. And therefore, giving licenses to the new private sector banks is part of the idea of improving the competitive nature of the in the
Got it.
Therefore, I must say that the all of this required a lot of courage. I mean, I think he had not only vision but also courage. I think that the two are both needed in order to be able to push through. And therefore, I would say he had in an abundant measure. I mean, he had an abundant measure the two qualities of vision and courage. And it happened in the case of the banking sector reforms. We introduced many things. For example, apart from introducing new banks, we also reduced, even in the case of the public sector banks, the extent of the ownership of the government. Instead of being 100%, we brought it down to 49%, leaving 51% to be owned. Therefore, we thought that will introduce an element of efficiency into the system. Therefore, in all of these things, we had to really talk to various stakeholders. And as far as the banking system is concerned, that the Congress Party itself, to which he had a great deal of emotional attachment.
Yes.
Having been introduced by Mrs. Gandhi. Therefore, any change in that thing is not that easy.
Yes.
And I think that we did that in that sense.
Yeah, God, that's the other thing that the world gives credit to both you and Dr. Manmohan Singh is that you all created markets in India for the first time. You all created the foreign exchange market and you created the government debt market, a yield curve. Can you speak about the thought process that both of you went through?
I think the first thing about the issue of ad hoc treasury bills is a system under which when the cash balance goes down, it was brought to the certain level by the issue of ad hoc treasury bills. This has the effect of automatically monetizing the fiscal deficit. I mentioned to Dr. Manmohan Singh, and he readily saw the logic of doing away with it, and he came forward and agreed, and we went ahead and introduced various measures to bring to an end the system of the issue of adult treasury bills. And in this case, I mean, I do not know whether we had any other finance minister they would have so readily agreed, because it does affect the government.
Yes.
But when he saw the logic of it, and he certainly agreed to did it.
No, I agree, sir. You know, actually, I covered that event as a reporter. And Dr. Manmohan Singh said at the press conference, you know, government has curbed its own power to borrow. I hope you all realize the big decision that we are taking, the curbs that we are putting on ourselves. So, you know, it was not really understood how big that decision was. Can you tell us any personal exchanges, any jokes that you all shared, anything that you can recall at a personal level?
Yes, I mean, I think the wherever he saw logic, he was willing to do it, and he said, go ahead and do it. For example, when we dismantled all the interest rates, this is a problem, because this also led to an increase in the borrowing rate of the government. But he has to look at, yes, the cost to the government goes up, but at the same time, it creates a government securities market, and it creates a proper financial market in the country.
Yes.
And he thought of it, and he said, yes, we must do it. Okay. And he gave all the support that was required. In the exchange rate also, the same thing was that, you know, for ourselves fixing the exchange rate every morning is not the most appropriate thing to do. I mean, we may, as I have said at one place, mimic the market and try to, but even then, I think to let the market determine the exchange rate is the appropriate thing. First, we said the dual exchange rate system, and then came the real problem, namely that people were of two views. That we increase the share rather than totally in terms of letting the market determine the exchange rate.
Yes.
And I remember the interesting conversation I had with him at that time. And we finally said that this slow movement is not appropriate. And what we need is to go and let the market determine the exchange rate. But also saying it very clearly that it does not prevent the intervention of the Reserve Bank of India in order to maintain stability. And that is the rule that we have continued to follow.
I can assure you, sir, that even the current incumbent of the Reserve Bank of India office will be thankful to both you and Dr. Singh that Reserve Bank still has the initiative to intervene in the market, and it does and has done so much in that sphere. Well, finally, sir, what about his second innings when he came back as Prime Minister? Any anecdotes you remember, any interactions you want to speak about?
Well, there are many in the sense, but they are all mostly economic in the sense that for example, even in the exchange market determination, there were others in the government who were saying that, no, let us not take the plunge and let us go slowly. Then finally, it came to us to determine, and the two of us finally decided that we should do it. And I think at the time of the bringing about some stability in the system, that is the first part of the work. That I think we took. There are days on which he and I were in the office into the night. I mean, that never happens. I mean, I think that kind of thing. And therefore, when things have to be done, it did. And for example, at the end of the devaluation decision that we took, Dr. Manmohan Singh said that, look, as a result of this, perhaps I may gain because I have some dollars to come from whatever work that I have done. But I am willing, he said, to surrender the excess because of the decision. I think that is so forthright on his part to say that, yes, we take the decision from a national point of view. If I have gained, I will give it out. In fact, at that time, I told him that I am a loser because at that time I had some domestic problem and my son was involved in an accident and so on. So we had to send money from here to take care of him.
Yes.
But therefore, the whole point is look at the national point of view and do what is right, and what happens to the individual is the second. So I think that kind of an approach to the problem is something that one has to learn from him.
Yeah.
Well, imagine Dr. Singh saying that I have a few dollars and if the dollars became expensive, I want to disclose. I mean, that's the height of political ethics. Well, actually, I wanted to ask you if you remember any anecdotes when you interacted as Prime Minister as well. Not just as Finance Minister, but as Prime Minister. Any anecdotes?
Well, as Prime Minister, I was also involved because I was the chairman of the Economic Advisory Council to the Prime Minister. And I personally think the role of the Economic Advisory Council depends upon how much trust that the Prime Minister has in the Council and how much advice does he seek. I mean, I think advice, if it is to be critically important, should be taken seriously and acted upon. Therefore, I have many things on which we spent a lot of time to understand the problem. Therefore, there were very many issues that we talked about.
Okay. Well, Dr. Rangarajan, it's a pleasure to listen to all those events and two great minds like yourself and Dr. Manmohan Singh taking those big decisions that created the middle class in India, created deep markets in India, stock equity markets, debt markets, foreign exchange market, and of course, later on, the decisions to distribute it to a larger percentage of the population through the MNREGA, the Food Security Act, the UIDAI. Well, thank you very much, sir, for sharing those personal anecdotes as well. Well, on that note, we have to say goodbye on the show as well. We will be back after a break and it will be time for more stock market action.